Good morning, everyone. Good morning. My name is Susan Lynch. I am the Associate Director of Lifetime Learning in UVA's Office of Engagement. We partner with the Alumni Association to offer you more than the score. A special thanks to both of our teams that work every home football weekend. So we thank them as we're coming to our last one today. Welcome to you, and we extend a warm welcome to our at-home audience registered worldwide for this event. As I mentioned, this is our final More Than the Score lecture this season, and we look forward to you joining us for upcoming virtual webinars and in-person programs this spring. Visit the Lifetime Learning website for these programs and online resources at engagement.virginia.edu/learn. Please register and share with your friends. Before we begin, please silence your phones. We ask that you hold your questions to the end of the program. Handheld microphones will be brought to you. Please ask one brief question. Speak directly into the microphone to ensure your question is heard, and kindly state your name and UVA affiliation. We are thrilled to welcome our panel of experts to speak with us on our program this morning entitled Follow the Money, How Taxation and Banking Has Affected the Racial Wealth Gap. UVA professors Claudrena Harold, Justene Hill Edwards, and Andrew Kahrl are joining us this morning to share their research expertise and books. Allow me to introduce our moderator this morning for the program, and she will introduce the panelists. Claudrena Harold is the Edwards Statinis Professor of History and Professor of African American and African Studies at the University of Virginia. She's the author of many books, including The Rise and Fall of the Garvey Movement in the Urban South from 1918 to 1942, and The Punitive Turn, New Approaches to Race and Incarceration. In 2018, Harold and UVA's Lewis Nelson co-edited the volume Charlottesville 2017, The Legacy of Race and Inequity. Her latest book is entitled When Sunday Comes, Gospel Music in the Soul and Hip Hop Eras. Harold is also a prolific filmmaker, as she has written, produced, and co-directed 9 short films that have been featured at numerous film festivals across the world. So please help me thank this wonderful panel for being with us this morning, and help me welcome them to More Than the Score. Thank you so much.
Good morning, everyone. Let me begin by extending my thanks and gratitude to the Office of Engagement and the Alumni Association for the opportunity to be in conversation with Professors Andrew Kahrl and Justene Hill Edwards, 2 brilliant historians engaged in cutting-edge scholarship on race and inequality and the wealth gap. The wealth gap has been the subject of great focus for scholars, journalists, and policymakers, and Justene and Andrew have positioned themselves as leading authorities on the historical roots and contemporary manifestations of the staggering disparities in economic security between whites and African Americans. I stand in awe of their scholarship, and it is an honor and a privilege to call them colleagues and dear friends. Before we discuss their books, let me provide a brief bio of these amazing scholars. In addition to his highly anticipated new book, Black Tax, 150 Years of Theft, Exploitation, and Dispossession in America, Andrew has published 2 prize-winning books, The Land Was Ours, African American Beaches from Jim Crow to the Sun Belt South, and Free the Beach, the story of Ned Cole and the battle for America's most exclusive shoreline. He's placed several articles in the premier journals of his field, won numerous prestigious fellowships, and presented his research to an audience that extends far beyond academia. Without question, he is one of the leading historians of race and inequality in the United States and the world. Like Professor Kahrl, Justene Hill Edwards is a remarkably gifted interdisciplinary scholar at the cutting edge of several fields, most notably U.S. slavery, the history of capitalism, race and inequality, and African American studies. Her 2021 book, Unfree Markets, The Slave Economy and the Rise of Capitalism in South Carolina, is a groundbreaking study of the economic lives of enslaved African Americans, their role in the development of capitalism, and the limits of free enterprise market participation as a pathway to racial equality. Justene is a recipient of numerous prizes, including the Carnegie Fellowship and the Mellon New Directions Fellowship. There's much to be admired about Justene's new book, Savings and Trust, The Rise and Betrayal of the Freedmen's Bank. Chartered by the U.S. Congress in 1865, the Freedmen's Saving Bank was created to assist previously enslaved African Americans in their quest for economic autonomy and security. In this provocative study of the Freedmen's Bank, Justene traces the history of the institution from its creation in 1865 to its devastating collapse in 1874. By 1874, largely Black depositors had placed $57 million in the bank. Like Justene's latest work, Andrew's new book, Black Tax, broadens our understanding of the history of wealth and inequality in this country. Across 15 riveting chapters, Andrew narrates the history of taxation in America from the perspective of Black Americans, detailing how local tax assessors have consistently overtaxed Black land and Black homes. He also chronicles how Black homeowners have and continue to be subjected to the harsh consequences and the predatory features of tax delinquency laws. Questions, and I'll shut up. 80 years ago, in his Economic Bill of Rights address, Franklin Roosevelt noted, "We have come to a clear realization of the fact that true individual freedom cannot exist without economic security and independence." So I ask you both, why hasn't wealth inequality improved over the past 50 years? And why in particular has the racial wealth gap not closed? And how does your work help us understand that? And that is 3 questions to just say, talk about the book.
Yeah.
Thank you.
Sure. So, well, thank you all for coming this morning. It's a real pleasure and honor to be here. And as Claudrena said, I mean, my book really sort of asks the question, what does the history of taxation in America look like when viewed from the perspective and through the experiences of African Americans? And also, how can we understand African American history better when we look at it through a fiscal lens? And one of the things that really comes out in when I look at local tax policy, and my book is very much focused on sort of local taxes, how they are administered, how the revenue is spent, and how they're enforced. And one consistent feature that comes out is when we're talking about property taxes, which are the lifeblood of local government, that African American communities and neighborhoods and homeowners specifically have been structurally disadvantaged, both in the way that the tax is set up, the way it's been administered, and that has both undermined the ability to build wealth through home and land ownership, and made the assets that African Americans have secured more vulnerable to loss. So when we talk about the sort of history of wealth inequality in America, it's not just a history of exclusion, but it's also a history of extraction, of the taking of the very assets that African Americans have managed to acquire, or the undermining of the value of those assets. And housing has been really one of the key variables in understanding how wealth inequality has been reproduced over generations. And so my book really kind of tries to intervene into that sort of larger debate by calling attention to the ways that the structure of taxes in America have really both quietly kind of fueled these problems and continue to do so to this day.
Yeah, well, first, thank you so much for the questions and for the very gracious introduction, and thank you all for being here. It is a wonderful experience to spend so long working on a book and then kind of put your head up and have the chance to speak with colleagues and friends, and so this is a real pleasure. But when I think about this question of the racial wealth gap and economic equality and inequality, I think about hurdles to financial inclusion. And one of the topics that I talk about both directly and indirectly in my book is that I think we often think that the federal government's attempts to really embrace and find policy solutions for financial inclusion really occur in the 20th century, really in the 1960s and the 1970s. I'm thinking about the Fair Housing Act of 1968, for example, or the Community Reinvestment Act of 1977. But I show in my book that we actually have to go to the 19th century. We have to go to the 1860s and 1870s. And at this time, at this really important time in American history, the period of Reconstruction, we see that we have both the federal government and the financial services industry making a real concerted attempt at financial inclusion. And we're talking about with the population of Americans who were most vulnerable at this time, and that was the recently emancipated African Americans who were formerly enslaved. And so I think to fully understand hurdles that continue to persist to kind of finding ways to remedy the racial wealth gap, that we actually do have to look at the policies and procedures that have worked in terms of financial inclusion and really what hasn't worked. And I think that the Freedman's Bank is a really fascinating example of both what did work and what has worked historically, but the real hurdles that have been put in place to financial inclusion, especially for African Americans.
So this question is for Justene, and we'll just continue on this and move historically. So taken together, your first two books engage old and new questions about Black capitalism. We both know that the unwavering belief in the power of the free market or free market solutions and private enterprise to solve the problems of racial injustice has been a dominant feature really of African American political thought, from the Negro conventions of the antebellum period to the progressive conservatism of Senator Edward Brooke to really President Obama's social capitalism. In free markets, you demonstrate how market principles and transactions create conditions in which racial inequality is not simply managed, but nurtured and expanded. Is this also something you do in your latest work in terms of thinking about the faith that African Americans put in saving?
Sure.
The faith that African Americans put in private enterprise and in the banks. Tell us a little bit more about that faith, but also about the betrayal.
Sure. Well, I think, again, studying the 19th century is fascinating in this way because we often don't think of African Americans, especially the enslaved and the formerly enslaved, thinking about, talking about, and writing about capitalism, but they were. They were the enslaved that I talk about in my first book were trading, they were making money, they were selling goods to their enslavers. They were kind of exchanging and selling goods to one another. And this type of economic knowledge, this type of economic behavior stayed with them as they made the transition from slavery to freedom. And so when the Freedman's Bank is founded in March of 1865, African Americans were thinking about using the bank to help them, again, make this transition from slavery to freedom, but they understood fundamentally the importance of saving in terms of helping them do things like buy land and own property. And African Americans understood fundamentally the importance of property ownership, not just for their own economic well-being, but as a demonstration of their embrace of kind of political ideals of democracy. And so it's fascinating to kind of think about this question of how African Americans, especially in the 19th century, thought about kind of free market capitalism or market participation, because they were buying into these ideas that to demonstrate their capacity for kind of participation and engagement in the democratic body politic, that they needed to understand and embrace ideas of capitalism. And they did so writ large. I mean, the bank kind of started out slow, but in its first 5 years, by 1870, the bank had expanded from New York and Philadelphia down south to Florida, then out west to Texas. And at its height, the bank had accepted about $37 million in deposits, and that's not adjusted for inflation. And so we're talking about a population of Americans, African Americans, who were fully bought in to the idea that kind of capitalism and democracy went hand in hand, which is why when the bank failed in 1874, it was such a devastating loss, because it conveyed a lesson to them about the fragility of this relationship, and that fragility stayed with them for generations.
Yeah.
Fragility and loss is also a theme in your work. And I just want to point out, I think when I hear the term wealth, being 70s, 80s kids, I think like Dallas and Dynasty. But you all have a more complicated conversation about wealth, because I think your conversation about wealth centers blue collar Black people, working class Black people who have managed, like my mother, who was a clerical worker, to put aside some money and put it in the bank, or have a home, modest home, but a home that they hope provide them with a certain degree, or provides them with a certain degree of security. Loss is also a theme in your work. And I would think with African Americans, that hope is not in a bank, but it's in land and it's in a home. And so could you talk a little bit about how you talk about loss?
So as Justine just mentioned, I mean, land ownership was so central to African American visions of freedom after emancipation. And in spite of not getting sort of assistance from the federal government, African Americans managed to acquire up to 16 million acres of land in the first 50 years after emancipation. And that was an incredible sort of struggle, and one that really shaped and animated larger visions of freedom, citizenship, and as well their relationship to the state, because as they are accumulating land, they are paying taxes on that land. And with those taxes, there's expectations of, say, the right to education, what they're like. So in a sense, like a lot of what I looked at by putting taxes at the center of African Americans' understandings of civil rights and economic justice was how they were very much making claims on the state based on their status as taxpayers, at the same time as being, facing these sorts of discriminatory practices that were quietly undermining their ability to hold on to land. And one of the things that really, kind of a through line that I find throughout this entire story, is that it was when African Americans' property became most valuable that it became most vulnerable. I sort of tell the stories of, various instances where African Americans own land that suddenly, becomes, highly valuable for whatever reason, whether it be through real estate speculation, the discovery of, say, oil deposits, or other types of sort of things that suddenly invest these properties with value. And then you start seeing these machinations of local tax enforcement. Say, suddenly a tax bill doesn't get entered, then it gets sold at a tax sale, and then they find themselves facing the threat of loss of their land. And so I really kind of go into the nuts and bolts of how these laws work and how they can be abused in ways that have quietly but profoundly affected the ability of African Americans to hold on to the property they've acquired, and how those sort of struggles over time have really shaped broader sort of struggles over civil and economic justice.
Let's talk about one of those laws, and that's the 1951 Illinois Revenue Act. And say a little bit about that, because I think that's a great example of what you're talking about.
Yeah, so one of the challenges in working on this book is that looks at local taxation in trying to tell a national story, a story that really encompasses both the broad sweep of American and African American history from Reconstruction up to the present, and does so at the national scale, is that local tax laws are very localized, and they differ from state to state, and they can actually be very different from state to state. And so, one of the things that I look at is how there's wide variation in how states enforce local tax payments, and what happens if you are late on your property taxes. And in the majority of U.S. states, what happens is if you if you fall behind on your property taxes, the local government will place a lien on your property and then sell that lien, which is essentially the debt, to private investors, who then can make money off of that debt from charging sometimes quite outrageous interest rates. And so I look at the story of Illinois, where they amended their laws in the 1950s in order to essentially incentivize investors to buy these debts. In order to, and in doing so, they created a sort of predatory marketplace whereby if a person fell behind on their property taxes, suddenly they could be saddled with mounting debts that they could not climb out from under. And if they didn't, they would lose their home, all for a single missed tax payment. And so what that also did was it created a very advantageous setup for people who wanted to take advantage of those laws. And so I look closely at both who were the lobbyists who helped shape this law and helped sort of craft it in a way that made it so lucrative for these investors, and then who were the victims. And what I found in looking really closely is that disproportionately this was affecting African American homeowners on the south and west side of Chicago. And it was enriching the few. There was people who really kind of were able to use this law to their advantage to amass fortunes, really primarily taken from often elderly, financially distressed, and disproportionately Black homeowners, and with real devastating consequences for those who got kind of caught in this trap.
You talk about the predatory market. In 1947, W.B. Du Bois says that the sin of capitalism is secrecy. And I want to focus more on the predatory market, but go back a little bit and think about some of the predators in your book. I've had the good fortune of reading these books very early. And I was deeply moved by them when I read them, and I was deeply moved by them when I read sort of the finished product. And there are some characters, Justine, in your book that we associate with J. Cook, the Cook investment house. We associate with post-Reconstruction. We associate with the Gilded Age. We think about the 1873 financial crisis. And there's a way in which the people in your story never appear in the histories of these financial institutions. And so you brilliantly bring together, I think, African American history and business history and the history of capitalism. But there is a story of plunder in your book that involves Jay Cook's brother, Henry Cook. Could you talk about that story of plunder? Can you talk about the story of African Americans investing in a bank, but not being the primary, folks who are withdrawing from the bank?
Yeah. So there is a story to be told about the Freedman's Bank as an example of African American economic success, right? The fact that mostly formerly enslaved African Americans are depositing tens of millions of dollars into this bank created for them. But on the flip side, and I think the larger story is that story of plunder and theft. And at the center of that analysis is a man named Henry D. Cook. He is kind of known in American history as kind of a brilliant financial mind. He is the brother of famed investment banker Jay Cook, and together Jay and Henry Cook established the nation's first investment bank. They are wildly successful during the war. They are responsible for an international bond sale to help raise funds for the Union's military effort in the South. They are close friends and confidants of Lincoln, of the former Treasury Secretary, but during the period of Reconstruction, the Chief Justice of the Supreme Court, Salmon P. Chase. And so Henry Cook is incredibly well connected. He is incredibly wealthy by the kind of standards of the mid-19th century. And he, in 1867, is convinced to join the board of trustees of the Freedman's Bank. At this time, the bank is moving its main office from New York to Washington, D.C., and the bank subsequently buys and renovates an expensive new building, and that building is actually adjacent to both the White House and the Department of Treasury. And so it is kind of in the middle of the White House complex. It is in this prime location, and the bank's board of trustees, kind of headed by Henry Cook, they spend about $260,000 on the building. It's about $5 million today, but by kind of 1868 terms, this is one of the most expensive buildings in the city. And so Henry Cook not only joins the board of trustees, he also becomes the chairman of the bank's finance committee. And the bank's finance committee is responsible for evaluating the bank's investments. And at this period of time, the Freedman's Bank was established as a simple savings bank. They were supposed to just accept deposits of the recently emancipated. And they were supposed to, for a small amount of interest on those deposits, essentially being a repository for African Americans' money, trying to keep their money safe. But once Henry Cook joins the board of trustees, things start to shift pretty quickly. He initiates the first loan, the first illegal loan, and it goes to the man who is the bank's actuary. And he embarks on a 2-year campaign to lobby both the board of trustees and members of Congress to amend the bank's charter. And again, the bank is established as a savings bank, but Henry Cook kind of spearheads the charge to get the bank's charter amended to allow it to operate legally as a commercial bank to make loans. This happens in May of 1870, not without some kind of congressional pushback. Specifically, Senator Simon Cameron of Pennsylvania, who was the first Secretary of War under Lincoln, he is on record as actually saying this amendment, this change to the bank's fundamental mission will fundamentally destroy the institution. And that is what happens. The bank starts to make loans. Henry Cook ends up taking out the largest amount in terms of loan value. We don't find out until after the bank collapses in 1874, but he essentially borrows about $500,000 from the bank, which was illegal under the terms even of the amended charter. And so, unfortunately, kind of going to the end part of the story, once the bank collapses in July of 1874, Congress mandates that the bank close. Henry Cook is not brought up on charges. He is allowed to kind of go off in kind of expanding his own business ventures. He ends up writing his own autobiography, and he says that like he kind of recognizes, he writes that he is ordained by God to be kind of a lord of capital and finance. And he writes this after his affiliation with the Freedman's Bank, after it fails, and after, most importantly, he fails to pay back the $500,000 of loans that he took out from the bank. And I think it is worth underscoring the fact that we are talking about the deposits of African Americans recently emancipated from slavery. And so all of this is going on. And Henry Cook, I think, is just an example of a historical figure that I show in my book, a historical figure that is kind of lauded and celebrated in the history of American finance, in the kind of sprouting of the Gilded Age, but looked at through the lens of African Americans and through the Freedman's Bank. He is at the core of the plunder that happens, especially in the early part of the 1870s with his affiliation with the bank.
Thank you. Thank you. You have an interesting figure in your book, Alan Blair. And could you tell us a little bit about our dear friend Alan Blair?
Yeah, so as I mentioned, one of the things that I really focus on is not just the sort of, the victims, but also the perpetrators of these types of financial schemes to ultimately defraud or, sort of take property from vulnerable homeowners and who utilize these laws. And I think one of the more chilling aspects of my book, especially when we're looking at how these tax lien sales have been exploited, is that it was all legal. And it remains legal to this day, yet often unconscionable in its outcomes. And so, in Chicago, and this is a city that I focus in on, but not to the exclusion of other parts of the U.S. But I think Chicago is a very, you can learn a lot from looking at that city's history and African American history through that lens. And so, this is a city that has, millions of African Americans migrating into it from the South in the mid-century, settling into neighborhoods on the south and west sides of Chicago, and struggling to become homeowners in many instances. And, while they are facing discrimination as a result, from banks who are refusing to, issue mortgages, from federal policies that are redlining their neighborhood. Nevertheless, not an insignificant number of people are able to scratch and claw their way toward homeownership. But with homeownership then comes the obligations of paying property taxes. And one of the sort of aspects of property tax administration that I show is how African-American neighborhoods were and remain to this day consistently overassessed. They're being forced to pay at a higher effective rate than white neighborhoods are. And these are due to both kind of political reasons as well as just structural features of property taxes. But the end result is that means that homeowners are not just paying more, but it also means that there any type of sort of situation that could cause them to, that would make them more likely to fall delinquent on their payments. And because of these very harsh and punitive tax delinquency laws, what that meant was as if you, again, fell behind on your property taxes, that lien would be sold and someone who, again, might see an opportunity there to, will snatch it up and then begin to charge you fees, interest, and if you don't pay, then you will lose your home. And so I tell the story of really someone who mastered the art of predatory tax buying, as it was known. And so Alan Blair, who he's a lawyer in Chicago in the post-war era, really comes of age in the 1950s and 60s, helped actually sort of craft that law that the state passed in 1951, and then exploited it to the hilt. And I sort of, by utilizing essentially the law as a trap to enrich both himself, but at the same time, with devastating consequences for the families who got ensnared. And so I really look at both his business practice, how he was able to sort of utilize this law, how he was able to, how he sort of went about his business, how he speculated on certain type, not just on sort of what types of properties would be most valuable or what could generate the most profits, but what types of homeowners would be most vulnerable. And I think in a sense, looking at the ways in which these types of sort of speculative strategies really honed in on particular types of homeowners who he felt would be more likely to either, more likely to not be able to pay at the end and then allowing him to take property from them. And so, in case after case, you find families who are able to, against all odds, be able to acquire a home, put down roots in Chicago, build community, and then for one reason or another, a missed tax payment sends them into this sort of vortex of debt and predation. And he was at the center of it, both not just sort of capitalizing on it, but actually shaping the very law that he was profiting from. And it was a very revealing journey in terms of sort of looking at this person and putting a face behind some of what oftentimes are these sort of abstract forces that we often see. I mean, we talk about the racial wealth gap, we talk about all the ways that we see these structural disadvantages, but they often kind of exist out there in just a sort of structure. But there are people within those structures, and so one of the things that my book really sort of focuses in on is not just how this sort of structure was built, but what it meant to live inside of it, and sort of what it meant for those who got themselves, both for those who benefited greatly from it, and as well as those who were victimized by it. And I, as well, it's not just a story of sort of perpetrators and victims, but also how those folks who were, taken advantage of fought back. And I think that was a really important part of putting a human face to this and actually kind of taking a story of taxes, which oftentimes might seem to be something that is very sort of dry and not sort of very action oriented, and actually showing here these are folks who are challenging this. I mean, a lot of what I learned about Alan Blair came from the fact that a African American family on the west side of Chicago were the named plaintiffs in a federal lawsuit challenging this very law. And so, there was affidavits, testimony that actually described what happened to them and forced Alan Blair to divulge like his business practices. And I think, really we begin to then from that begin to see sort of, yes, like there are sort of people at play here and people's lives are being affected. And there's actors behind these sorts of inequalities.
Where do African American leaders, where are they in your stories? You talk about African American agency, but these issues that you raise seem to be major public policy issues. And I wonder if you might talk about the African American leadership classes' response to these issues. And perhaps I'll just throw two names out there for both of you. One is Frederick Douglass. Frederick Douglass is present in your story, Justene. And for you, Andrew, Harold Washington, the first African-American mayor of Chicago. And like so many African-American mayors enmeshed in the urban regime, attempting to respond to the problem of deindustrialization, automation, decentralization, declining tax bases. And so, as you noted, this is not just a Chicago story, but it is a Detroit story. It is a Cleveland story. Interestingly enough, I think you also make it an Edwards, Mississippi story as well. But those two figures, Frederick Douglass, Harold Washington, in terms of thinking about how the African American leadership class is addressing these, is addressing these issues.
Yeah, no, I like your framing of it as kind of the Black leadership class because in many ways they are necessarily at the forefront of many of these conversations, especially about wealth and inequality. So Frederick Douglass is just a fascinating historical character. And just kind of as an aside, I've been working on this book has been fascinating in that, like, I'm talking about a relatively small network of historical actors, right? Lincoln and Douglass and Cook. And so Douglass kind of emerged fairly quickly as a major player in this story. So Douglass is an early supporter of the Freedmen's Bank. When he moves to Washington, D.C. in 1871, he takes over a major Black newspaper in the city. And every issue of the newspaper has a story about the Freedmen's Bank, whether it's a new branch that opened or the amount of deposits accepted at branches across the nation. It may be a letter from a white bank administrator saying, talking about the bank's good work in particular cities. But Douglass, and he is asked to join the board of trustees a few times. He kind of demurs and finally does so in kind of a haphazard way in 1873. But once the Panic of 1873 happens and J. Cook and Company collapses, there are runs on many bank branches across the nation as African Americans are kind of reading and sensing what's going on. And they are first and foremost scared that they won't have access to their deposits. And so at the time, the bank's founder, John Alvord, is the bank's president. He becomes president in 1868. And a small cadre of African-American trustees, there are about 3 at this time, including John Mercer Langston, the first Black congressman from Virginia. He's on the board of trustees. They start to convince the other members of the board that Alvord is not equipped to handle being the bank's president at this time. And it is worth saying that, and Claudrena's laughing because she knows, John Alvord was not a banker. he really was not even that great with his family's finances. He was an abolitionist, he was a minister, but he was not a banker. And so he is encouraged, I think forced to step down from the head of the Freedman's Bank in February of 1874 after 2 disastrous examinations from the Office of the Comptroller of the Currency. And so the bank's Black trustees really hope that they can bring in someone who will redeem the bank's reputation among African Americans. Now, at the same time, the bank's white trustees fully understand that the bank is on its last legs, that the bank really cannot be redeemed. Anyway, the board extend the invitation for Douglas to join the bank as president, and he accepts the invitation. And so in March of 1874, Frederick Douglass, probably the most famous, the most recognizable Black person in America, he joins the bank as the bank's president. And he quickly realizes that the bank is over leveraged. They have very small amount of money on hand. So much of the money has been lent out that if all depositors wanted to withdraw money, they could not. At this point, the bank had a little less than $3 million in a combination of bonds and stocks and currency, but about $3.5 million had been loaned out. And by March of 1874, about 75% of that loan volume was in default. And so Douglas was stepping into the presidency of the Freedman's Bank at a horrible time. He realizes that the bank can't be redeemed. And so when the bank closes on July 2nd of 1874, Douglas is known as the African-American person, the bank's first Black president at the time of its failure. And he ends up essentially spending the rest of his life trying to kind of redeem himself in terms of his ideas about economic prosperity and Black wealth, because he is at the helm of this really important bank for African Americans at the time of its failure.
Yeah, I mean, one of the things that and really that sort of led me to want to explore this history was questioning some of the myths and misconceptions surrounding who pays taxes and who receives the bulk of the public's money. And one of the things that I sort of found is there was this sort of myth that was really used to sort of justify and rationalize the horrible inequities in, say, public spending, whether it be for African American schools in the Jim Crow South, or even just like streets, sidewalks, water, all these ways in which African Americans are being deprived of their fair share of public tax dollars through this notion that, well, African Americans don't pay any taxes, so therefore they don't deserve anything back from the state. And so this sort of like myth, this sort of insidious lie, essentially, was one that African American leaders were, from the 19th century on, having to challenge at every turn by just simply stating the truth and actually producing the receipts, quite literally showing, this was back in the early 1900s. W.E.B. Du Bois was conducting studies showing, in fact, African Americans were subsidizing white schools across the South. They were literally paying more in tax dollars, much more than they were getting back in return for their schools. And so, this kind of, challenging this myth at every turn and asserting their rights as taxpayers was one that is a sort of through line throughout this history. And I, sort of position that within the larger struggle for civil and economic justice throughout this time. And it kind of continues into the era in which we start seeing African Americans fighting for and winning election to mid and large American cities. Beginning in the 1960s with Carl Stokes and Richard Hatcher winning mayorships of Cleveland and Gary, Indiana, respectively. Also, as well, I mean, I'm glad you mentioned a place like Edwards, Mississippi, or Claiborne County, Mississippi. This is not just, I really look at how these fights are happening at the local level across the country, where African Americans are fighting to win elective office so they can actually have control over these administrative powers that have been used to their disadvantage for generations. And actually, in many instances, actually seen for the first time how taxes were administered. I mean, I tell these stories of instances where, say, the first African American who was elected tax assessor in the history of Mississippi comes in and actually sees for the first time these tax books that are just have some of the most valuable land in the county. White-owned land is just paying next to nothing, while small African American homes, sitting on lots in town are paying more in absolute dollars than, say, antebellum era mansions, and how they're sort of fighting against this, both in terms, and how this is actually sort of was politics, like at the local level. And so I tell the story. Harold Washington is a very well-known figure in African American and urban history, first African American mayor of Chicago. And before he won the mayorship in 1983, in the late 1970s, he was instrumental in helping to really call greater attention to these inequities and how tax assessments were being administered in Chicago, working with a statistician who was actually able to sort of uncover how, across the city, African American neighborhoods were paying higher effective rates. And using that to really kind of galvanize local communities, going and explain, this was something that, especially doing lots of the oral histories I did in working on this book, this was something that was kind of sensed but never fully understood by many folks who were paying these taxes. They felt like they were paying more than they should, but they didn't really it was hard to understand how that was happening. And so one of the things that Harold Washington was doing after he was able to really sort of not just document that this was the case, but ultimately how it was happening. He was going around Chicago holding these little seminars in church basements where they would get up with, in front of a blackboard and just kind of explain this in plain English to, community groups, block clubs. And from that, beginning to sort of get African Americans across the city to begin to sort of, fight for their rights and demand, fair treatment from city and county officials. And ultimately was something that helped sort of push him to the center of the struggle for political power in the city that then led to him being elected mayor in 1983. But then, as I sort of show, once he gets into office, he realizes how great the sort of fiscal challenge is that many of the cities, and this was the case in many cities where African Americans were taking political power. This is a time period where cities are experiencing a draining of their tax base as businesses and industries leave, as many white homeowners are moving to the suburbs, taking their tax dollars with them. So they're facing this sort of real fiscal constraints, and as their tax base is getting smaller and their needs are growing, and at the same time, in the 1980s, federal funding of cities is also decreasing. So Harold Washington comes into office with real hopes of actually sort of leading a sort of cause toward tax justice, fairness, beginning to sort of correct some of these inequities, but finds himself, oftentimes really trying to sort of, find whatever revenue he can in order to maintain the sort of, city's fiscal balance. And so and this was the case in so many cities, that they were encountering these real challenges that really pushed these questions of equity on the back burner when they were just dealing simply with trying to kind of keep the books balanced in the immediate term.
Awesome. So we're gonna open it up and give you all an opportunity to ask questions. I just want to acknowledge the awesome questions that came earlier from some participants who are online, and a lot of them dealt with current questions. Could a bank such as the Freedman's Bank operate today? I think we may want to say, do we want that to operate today? How does this topic continue to affect African Americans today? How has the wealth gap changed over time? These are just some of the questions that are concerned about this current moment, but we would love to hear from you. So,
I know a lot of people my age who tried to retire in different states. They came here because, taxes were lower, and I understand that's the same in Texas or something like that. But it was very hard for service people, teachers and that sort of thing, to retire in their state because they'd have to work forever and they were old. But also, have you ever heard of or know about Muhammad Yunus in Bangladesh is now president? And what is he doing? Are you following that? Okay, thank you.
No, I'm not aware. Sorry.
No.
You know, he's the billionaire bank who gave the dollar to. You know about what he did, Muhammad Yunus?
No, but I'm sure I'm
Yes.
interested in learning more. So thank you.
He's now president of Bangladesh, newly hired, and he's changing their system, monetary system. So you might want to look at that as well.
Great. Next one. Anyone else have a hand up? Here we go.
What's the way forward, especially considering the fact that in the past 10, 15 years, we've seemed to have gone from one political extreme to the other? Is there a set of policy positions that you can see both sides agreeing that would address these issues that you've brought up in both your books?
Sure. Can we have names and affiliations too?
Yeah.
That would be helpful.
My name is Carl Tate. I'm just interested in this topic. I'm not affiliated with UVA.
Thank you, Carl.
Thanks for that question.
Yeah. Yeah, I mean, I think your question makes me think of a recent report released by the Department of Treasury. I think it was at the end of October, so right before the election. And the Treasury released a report about financial inclusion. And this was a robust set of policy solutions to help increase the rates at which especially underserved communities engage with financial institutions. And so according to a recent report by the FDIC, it was about 3 years ago, about 14% of African American homes were unbanked and underbanked, and so don't have or have not had a sustained relationship with the financial institution. That number is about 2% for white Americans. And so we see this dramatic gap between the ways in which white Americans have historically and now engaged with financial institutions and the rates at which African Americans do. And if we understand how mortgages are understood, especially among families and among communities, we know that in order to get mortgages, in order to have access to credit, you have to have a sustained relationship with a financial institution. And one of the reasons why, according to this Treasury report, African Americans are least likely in comparison to white Americans to have sustained relationships with financial institutions is this question of trust. The fact that African Americans disproportionately do not trust white-owned traditional banks. And so if they are kind of taking themselves out of this landscape of traditional finance, I think it is incumbent upon policymakers to ask why. Why are African Americans disproportionately not engaging with traditional financial institutions? And if trust is at the heart of that, then perhaps going back and understanding where that lack of trust comes from is really important. I think the federal government's support of Black-owned banks and community banks in particular, or minority-owned financial institutions is incredibly important, because that's one of the things that the Freedman's Bank did not do. The Freedman's Bank was taking money from Black communities and lending it out to whites. About 95% of the loan volume went to white Americans, which is kind of staggering, again, considering the population that the bank was created to serve. And so I think really pushing financial inclusion, thinking about the history of why certain communities have not traditionally engaged with these financial institutions and the ways in which that relationship has been both exclusionary and predatory, sometimes at the same time, I think is really important to kind of thinking about policy solutions to these bigger problems. Whether the next administration kind of begins to adopt these policies, I'm not sure. But I think it is important that financial inclusion be at the heart of those conversations.
Yeah, thank you for your question. And I think if there's one thing that's sort of refreshing about my book is that it's focused on local politics and local government. And it focuses on, I mean, these struggles don't break down neatly along partisan lines. They don't sort of change like every 4 years. In fact, there's a lot of sort of consistency in some of the sort of struggles that I chart throughout the book that in many ways kind of also point to the importance of these local institutions and engaging with local government and local politics in meaningful ways that I think in some ways offers all of us a sort of a reminder that these sorts of struggles don't just happen every 4 years. They're actually kind of happening every year and continuously when it comes to sort of the role that local government plays and can play both in perpetuating inequality but also sort of offering opportunities to fight for economic justice in your own communities. And so one thing that I really kind of come to at the end of my book is and this is a problem I think is national in scope, is how we have in the U.S. today many communities that just simply lack the resources they need to be able to provide these essential services that we count on local governments to provide: clean water, public schools, many of these sort of things that are we have entrusted to local governments results in these sort of real disparities in the resources they have between, say, wealthy communities that have large tax bases that can ultimately sort of tax property at lower rates while generating more in return. So essentially, we have situations now where if if you live in a sort of all-white and sort of prosperous community, you can pay lower effective taxes than you would if you were, say, living in a more diverse municipality, which in turn incentivizes segregation. It incentivizes the very inequalities that we're trying to fight against. And one thing that I show is like the consequences of this, like the end result of this sort of fragmentation of our sort of tax bases is something like we saw in Jackson, Mississippi a few years ago, where the city's water system collapsed for lack of revenue to be able to fix it. And this is something that is a problem that we need to sort of begin to make a national priority, is ensuring that localities have the resources they need to provide these basic human rights that we've entrusted to them. And another aspect of it as well is that, one thing that I find is that, the localities that are most eager to sell, say, unpaid tax debts to these private predatory investors are the ones that are facing the most, severe fiscal challenges. And that can be black-led cities, it can be white-led, the people in office are oftentimes more motivated by the desire to bring in revenue, even if the consequences can be really devastating for their own constituents. So I think one thing here is thinking at the national level how we can begin to address these real imbalances that happen between places, not just between people, but ultimately between where you live can ultimately really have an effect on your ability to access these kind of crucial resources and how much you have to pay to get them. So these are things that, again, happen at the local level, but they are also ones that maybe we should think about as national priorities.
Hello, my name is Lavinia DeVilliers, and I'm from Charlottesville, Virginia. I, too, would like to recommend that everyone read Mohammed Yunus's books on capitalism and banking. He has a very different approach from the American approach of doing things. It's much more worker related and it's much more egalitarian. It's a different way. I can't sum it up myself. But if you read his books, he's amazing. It's a whole new way of doing things. And I'm disappointed that you all haven't heard of him before because he is so amazing. So Mohammed Yunus and his way of thinking about banking and incorporating workers into the system. Anyway, read his books because you'll understand it more than I could explain it. Mohammed Yunus, he's amazing.
Got one right here.
Hello, thank you so much. This has been fascinating. I'm Dot Kelly. I'm Darden 92, and I teach personal finance here to undergrads. And this is awesome to listen to you. I want to know what your thoughts are of people pushing home ownership as the solution to the racial wealth gap, given all that you know. Because in my class, I push really hard. Actually, whenever someone brings it up, I push hard back on that because of exactly what you're talking about. So could you please share your thoughts on that and what, how you respond to that argument?
I feel like we might have some of the same students because I teach I teach a class here at UVA on race and real estate in the U.S. and I sort of address those very questions. What does it mean to sort of base as effectively have as U.S. policy the home ownership is the basis for household wealth creation, and how that, to what extent can African Americans participate in that sort of economy on equal footing, given what we know about how housing markets have been built along a color line, how the value of homes, are oftentimes tied to the racial composition of the neighborhoods in ways that disadvantage African American homeowners, meaning that their properties are worth less because they own them, and they appreciate at a lower rate than they do in white, more prosperous neighborhoods, and how that, in a sense, even as home ownership can be and home ownership is a home. It is something that is more than just an asset. It is an important part of a person, family's ability to sort of be able to build roots and to sort of form community. But it's also oftentimes treated as a sort of asset and as a means of sort of wealth creation that, quite frankly, just continues to structurally disadvantage African Americans, and in many respects fuels this continued sort of wealth inequality because of what I just said in terms of how these assets are valued differently based on who owns them. So I think it is something that we need to sort of continue to question. Not to mention, of course, as we know from what happened during the 2008 financial crisis, where African Americans were being preyed upon by subprime lenders who were trying to utilize this promise of home ownership and the appeal of that to lure them into predatory loans that, what was it? Half of all Black wealth in America was wiped away by the foreclosure crisis. So these are it is a very we do need, and I'm glad to see that we're sort of questioning some of the logic here, and maybe again getting us to think more deeply about what might actually be happening in these financial markets.
But I would also push back, and I would also say we have to think about the cultural foundations of how Black people think about home. So I grew up in the family home. Grandmother, domestic, purchased it in 1942. It's not about wealth creation, it is about stability. So when I arrived in Charlottesville, rented a 2-bedroom apartment for $736 in 2004. It's $2,000 now. So I think also this conversation about home ownership is also rooted in this desire for at least some stability, and also to sort of function in a fixed market, when the market is so volatile. So I would I love that question. But I'm also just kind of thinking about how how people are thinking about the blue collar people that I know. The blue collar folks that you write about, how they are thinking about home. I think my mom always understood that her home would never be a source of wealth.
And that's it's when it's sold as this wealth creation thing. It's the same predatory practice in a new cover.
Which is all the more reason why, we need to address some of the ways in which these tax sale laws make these homes more vulnerable to loss. And it's the very folks who don't treat them as some sort of asset that they can build wealth from, but as a home. And I think that is, we need to have laws that ensure that property taxes are paid, and that there's a system for ensuring that people can make their payments, but not in a way that actually really compounds those disadvantages and makes them more vulnerable to losing the very thing that again means much more than just an asset.
Right. Thank you. More and more questions are popping up, but we're out of time. I want to thank everyone for joining us here in person and online. And we have some gifts for our speakers on behalf of UVA Lifetime Learning and the Alumni Association. So enjoy those. And for you all, we've got the UVA bookstores here, so please stop by and see the variety of books they've got for sale. And we have a prize drawing. Claudrena, if you want to pull out a name.
Okay, I'm gonna spin around.
Okay.
All right.
George and Holly Corte? George and Holly? Okay, great. This talk has been recorded, so you guys can visit the UVA Lifetime website and find our vodcast library. And there's a QR code up there that's handy too. So enjoy the rest of your day and have a great Thanksgiving.